Okay, thank you so much for this wonderful opportunity to share with the students on the examination answering techniques for CA 2.5. My names are Martin Kawe, as introduced already. I am actually a financial management expert, and I will be sharing with you the examination answering techniques in CA 2.5, and our desire is to ensure that this enhances your chances of passing, your chances of understanding this particular, subject, so that, as you attempt the exams, you should attempt the exam with that confidence, knowing very well what is expected of you. So the issue here is to try and make that awareness of areas where you need to concentrate and improve. My presentation for this afternoon is laid out as follows. I will introduce the course itself, financial management, and I will also share with you the competences and the learning outcomes in relation with the course. I'll also share with you some common mistakes that we have seen over time, being exhibited by the students, and these are the same mistakes that are, repeated every sitting. So we are trying to make you aware of such mistakes so that you can avoid them. And once you avoid them, then you should be able to, pass this particular, subject. I will also further share with you some of the examination answering techniques you can employ as you, address, or as you, sit for this particular exam. And I'll conclude and invite, questions or clarifications, and as well as contributions. Okay, so financial management is basically looking at how organizations are managing their resources efficiently and effectively in a way that enables them to achieve the objective of an organization. So you see that the organizations have different objectives that they pursue. We have organizations that are non-profit making, and their objectives are aligned to non-profit making. And we have also organizations that are, into profit making, and their objectives are basically aligned to profit making. Now, this particular course is focused on profit-making organization, and therefore, the objectives that we are talking about, being achieved here are those of profit-making organization. Now, even with the profit-making organization, there are various objectives that these objectives have set for themselves. And you realize that in those objectives, there are financial objectives as well as the non-financial objectives. Now, out of all of these objectives, there is a primary objective that, stands out of them. And this primary objective is to maximize the wealth of shareholders. Okay? Now, it doesn't mean that the other objectives are not important. These other objectives, we can call them secondary objectives. They are also important because they enhances the organization to achieve its primary objective. So if the secondary objectives are not met, then that can compromise the achievement of the primary objective. So all the objectives are important. Okay, so whatever the course is about, whatever the course is going to cover, will be about equipping you with the skills, competences to enable you, enable you make effective, efficient decision in the use of resources so that you maximize the shareholders' wealth. So if you look at this particular course, there are, some key decisions that you'll be required to make as a financial manager. Okay? One is the financing decision, the second, investment decision, and we have the dividend decision. And on top of that, also, you are also expected to be able to do some business valuation. And as you might be aware, this particular course is at application. So the questions that you'll be expecting in this particular course, it's at application, and you will be presented with the scenarios, and you'll be expected to apply your knowledge, in those scenarios and come up with the answers. Okay, so this is what the course is about, and this is what you will be expected to present. Okay, now the competences and learning outcomes in this course, but before I go to the competences in this course, allow me to also probably explain what a competence is and the learning outcome, because these are the things that you encounter the first page that you open when you get your study manual. This is what you are going to see: competences, learning outcomes, and things like that. So a competence is basically the ability to do something successfully and efficiently. So what sort of competences are we trying to develop in you? Those are the competences to which you should make you be able to efficiently and effectively use the resources of the organization so that you can maximize the shareholders' wealth. So that's what you'll be will be focusing. So what are those competences? We'll be trying to develop competences in you in relation to financing. You should be able to source appropriate financing. You should be able to evaluate the investments that you want to undertake. You should be able to make those dividend decisions. You should be able to do your business valuation. Okay, what are the what are learning outcomes? So basically, learning outcomes are statements that describe the knowledge or skills students should acquire by the end of the particular assignment, class, course, or program, and help students understand why that knowledge and those skills will be useful to them. So you have these statements at every topic you are studying, you are going to see these learning outcomes, given like that. Those learning outcomes are very important for you to know, because even when it comes to the assessment, the exam is actually focused on those learning outcomes, because you will be assessed to see if you understand. Okay, you understand. That's what you'll be assessed on. And in any case, the examination is not just about assessing to assess the level of understanding that you've developed, after having gone through a particular course. The general competences that we are talking about here, though I've indicated already, but the first competence is that you should be able to evaluate financing, options. So these are financing decisions that you'll be making. And this particular competence account for 20% of the syllabus. So meaning much of the assessment that will be done, that's in form of the examination paper, it will be 20% of it is supposed to be on financing. Okay, so that is financing decision. The second is the appraised investment. So this is investment decisions that you'll be making. So these investment decisions account for 30%. Okay, so the paper should do comprise of 30% of it will be on investment. Okay, then appraise business valuation. Okay, so this one will account for 20% of the syllabus. So there will be questions that are focused on valuation, and that will cover 20% of the syllabus. And then appraise working capital requirement. Okay, so you will be required as a financial manager to make decisions regarding how you probably finance your working capital, how you manage, your current assets as well as your liabilities, your current liabilities. How are you managing so that you are able to support the day-to-day operations of the business? So you will be expected to be asked on this, or to be tested on this, to see if you understand. And this will account for 25% of the syllabus. So these are the 4 competences that you'll be expected to exhibit after having gone through this particular course. And if you look at the paper that is administered during the exam will be around this framework. The next is the learning outcomes. There are actually 6 learning outcomes. Okay, the first one is talking about the law of financing within an organization. Okay, and factors including risk that affect financing decisions, and also you will be required to calculate and advise financing requirements. So when you look at the first training outcome and the second, they are pointing to the competence of financing, the first competence. And when you look at learning outcome number 3 and 4 is pointing to the second competence. Okay. And when you look at learning outcome number 5, that points to the third competence. And the last learning outcome points to the last competence to do with working capital. So you can see that these are related, interlinked, and you should know about them because this is where it all starts. So don't rush to go and start looking at studying the details of it without understanding this. Okay, so I expect that after this interaction, you should find in your spare time to try and reflect on this presentation or this discussion we are having. Okay, so now in this, the competences, the learning outcomes, you saw that there are certain verbs, key verbs that were being used because you see when you are being asked, a question is being asked, there will be a verb that will be which you are supposed to act on. Okay, so that verb that is being used actually is guiding you on what level of learning you are being asked. So when you look at just the learning outcome, you can see evaluate, calculate, apply, evaluate, prepare, appraise. All those are verbs that are being used, and you need to understand them. What do they mean? So there are some key verbs that we can talk to in your syllabus, like the calculate. So you should know when you are being asked to calculate, what is it that you are required to do? When you are asked to explain, what does it mean? Because sometimes the students will be asked to explain and they start listing. So the question was not about explaining, the question was about listing. So you don't be expected to start, explaining when you have been asked to list, or you start listing when you have been asked to explain. Okay, so when I say explain, I'm saying make it clear, make it clear to someone. That's what it means. So you should be able to know those verbs. Evaluate. So when you are asked to evaluate, what does it mean? Okay. So evaluate, basically, you are looking at the systematic determination of a subject's merit, worth, and significance using criteria governed by a set of standards. Okay. So if you are asked to evaluate the investment appraisal using the net present value. So the net present value is a standard there that you are going to use. So when you start appraising, you evaluating, you'll be looking at the net present value, and you will be able to make judgment based on the outcome of your evaluation based on the net present value. So in this case, it means you should understand what net present value is about, so that you should be able to evaluate. So there are other verbs also, assess, illustrate, which I know Zika is going to share this presentation, and I expect you to go through so that you can further understand those particular verbs. Okay, things like recommend, you are going to see those across the the questions that have been asked, as well as just even in your syllabus, you find such verbs. Discuss, discuss, we are talking about argue and debate about the pros and cons of an issue in order to reach a decision. Okay, so if you are asked to, you are asked to discuss the merits of net present value when it comes to investment appraisal, you will be expected to look at the pros and cons of NPV so that you reach a decision whether it's the best, method that can be used. So these verbs are very important in your, you know, they are very important for you to know so that you can understand the level at which you are being asked, you know, to do or to react or to provide the answers. So if you are asked to explain, don't state, don't explain, make it clear. Okay. Allow me now to move to the common mistakes that are exhibited by students, you know, from one exam to the other. So let's start with the first one. This one, we'll keep on singing about it. Every time we have examination answering techniques and we are, asked to share a presentation. And when I try to look at the past performance, try to look at the, answers that were being provided by students, one thing still stands out, and that is to do with the failure to cover the whole syllabus before attempting the examination. That comes out from the majority of the students. I don't know whether we just focus on certain areas and we feel that that will be adequate for us to acquire the competences that are expected. But I must say here that the paper is not prepared like that. The paper is balanced when it comes to the competences being tested. So you are expected to cover the whole syllabus. And this, is shown from the answers that are presented. You find some students, they will answer only one question and they fail to answer others. Or sometimes they will answer just 3 questions and they fail to answer the required number of questions. So there you see that one of the implication here is that the students may not have understood the whole syllabus to be able to, for them to fail to answer the required number of questions. That's one assumption. And also we see students providing answers that are not actually related to the question. Find the whole question, somebody is just trying to, make up for the time that they're in the exam. So they will start writing answers that are not related to the questions that are being asked. Okay? So you are strongly advised as the students that you start through first, you look at the competences, the learning outcome, so that as you even go deeper into the question, as you try to, study, you should ensure that you at a level where you can exhibit these competences that we are talking about. Because one secret I can expose here or tell you or share with you is that the examination paper that you see that are set by Zika, they are set, based on the syllabus, the detailed syllabus. When you check it, it explains, like even when we say the learning outcome number 1, under the detailed syllabus, it will show what are those things that are supposed to fall there. So once you just get to know those and you go and study and ensure that you know those, there is no exam that you are going to fail that is set under Zika. This is not just for this particular course. This is for all the courses that you are going to see. Because even examiners, when they are setting, they are using this syllabus, this detailed syllabus. That's what they are using to ensure that they align the paper to that. So if you can understand the syllabus, you will enhance your chances of passing. Okay, I can share with you like some of the coverage, of the paper, the examination paper. So you will see that you have the first competence there. You will see that this competency, the chance of it being tested from both section A and B is quite high. Okay, so this is where you have things like calculate the cost of the weighted average cost of capital, such things. It's falling here, where you are being tested to probably evaluate the source of finance for a particular, investment or in working capital. You will see it there. So the questions on this are highly tested in A and B. But when you look at investments, they are highly tested in section A. So you are most likely to find every paper has got a question on investment appraisal in section A. So, and this is compulsory. So you can't go into the exam without understanding investment appraisal. You can't manage to pass the paper like that. So it's something that you need to know. Appraise business valuation, you are likely to find this in section section B. And the working capital, you are likely to find it in section B, like a fully fledged question. You'll find it in section B, like that. But not to mean that you can't find something, or you can't find a question where you are being asked on something like in section A, where you are being asked on working capital. You will find such a question. But you find that section A is dominated by investment appraisal. And that is the explanation is straightforward. You can see the percentage that this contributes towards the syllabus is 30%. That's the highest. So what am I saying? I'm saying prepare by covering the entire syllabus. Look at the distribution. There is no competence that is not being covered in this map that I've shown you here. So if you try to, just specialize in appraise, investment, and financing, then you are just looking at 50 marks. Now, what are the chances that you go into the exam and get everything correct? The answer is 0. The probability is 0. And you are going to find that you end up getting, if you are so good, you find that you get 40 from the 50, and 40 is a fail. And that's the more reason why you need the entire syllabus for you to reach the pass mark of 50. Okay, so when you look at the investment appraisal, basically there are certain things that are what? They are, it's like expected. There are certain things when you even see the investment appraisal question, you see that there are these things that stands out. So when you have an investment appraisal question, just go and check it out. You find that for instance, the variables, what you need for you to calculate the NPV, okay? You will need the discount factor. So you know that it's either you'll be given the discount factor or you'll be taught to calculate. And this discount factor we use in NPV, it's the cost of capital. Okay. I know there are other investment appraisal techniques, uh, but the NPV is superior and mostly it's highly tested in section A because of its superiority. So you can see that the first aspect is the variables being determined. I mean, being, that will require to determine the NPV, discount factor. So the discount factor is the cost of capital. So it's either you are told to calculate the cost of capital or you are given. Okay. So if you are given, take note, the cost of capital that have been given, is it has it been adjusted for inflation? Is it real or it's nominal? Okay. If you have been given, you check out that, because you know the implication. If the cash flows I'm going to use are in nominal terms, then I have to use the nominal cost of capital. Okay, so I should take note of that. But if I'm told to calculate, I should know how to calculate it, the cost of capital. It's very important, because if you have been given a cost of capital in section A, the chances are that in section B you'll be required to calculate it. Okay, if you have been asked to calculate it in section A, you might be asked something else in section B. So you have to take note of that. Then you have to identify the cash flows, the relevant cash flows that you are going to use. What are those relevant cash flows? Okay, you have to identify them. Okay, the next, of course, the timing of the cash flows, you have to check it, because it's important to know when the cash flows are occurring. You also have to identify if these cash flows are annuities or not, because you'll be given information about annuities, and if you don't understand annuities, you are most likely to, I'll say, abuse the answer scripts, because you'll be given a project of 50 years and you start discounting the present cash flow, discounting the cash flows, across the pages, because you don't understand the annuities, and you lose on time and things like that. The other thing is in the calculations. You most likely, when you are doing investment appraisal, there will be issues to do with inflation, because you'll be making projections into the future, and we know that inflation, is here to stay. And even in the project, we do factor in inflation. So inflation is factored in our evaluation. Taxation, okay? You have to tax the cash flows, and this is also where you see if there are any capital allowances given there. So some tax relief here and there, you'll be required to calculate that. Okay, the fixed costs, you'll be told whether they are also increasing or not. So you need to know how to deal with that, as well as the working capital. And also the advantages and disadvantages of NPV, you need to know this. And the other thing is the decision rule. It's quite shocking that sometimes the students will calculate everything, and they are correct in a manner that they are calculating the NPV. But when it comes to the decision, they don't make any decision and they leave it at that. And you lose some valuable marks just like that. Okay, so if you are doing NPV, please make sure you make a decision whether you are accepting or not, and you should provide the reason for your accepting. Don't just say accept investment just like that. You should explain why you are accepting. So if you are saying it's positive, you say, I'm accepting this investment because it's giving us a positive NPV. What does that imply? What does that mean when it is positive? Well, you should state that this positive means that the wealth of the shareholders is going to be maximized. And remember, the objective is to maximize the shareholders' wealth. So you're accepting a project because it is going to increase the shareholders' wealth when it is positive. If it's negative, it will decrease, and that's why you are rejecting. So it's important to say out such statements so that you gain only easy marks like that. Okay, so that is the on the syllabus, and I've tried to just narrow it down to investment appraisal to just try and give you a picture about this, because I know 40 marks is centered around this investment appraisal, and one of the key techniques is the NPV. And that's why I thought I share with you just, on what it is, okay, on what this investment appraisal is all about. Let's move on. You'll see that some of the other mistakes, I would have highlighted them when I was trying to talk about the NPV. So one of the other common mistake is just the issue of failure to identify the relevant cash flows that you are required to include in your NPV, calculation. And also sometimes you don't pay particular attention to the timing of the cash flows. So you find that you end up missing it all. Okay, so it's important to be able to identify what relevant cash flows are. Okay, so for instance, when we are talking about relevant cash flows, you are looking at the cash flows that vary with the decision that you want to undertake. If a cash flow is not varying with the decision that you want to undertake, then it's not relevant. Okay? For instance, if you are evaluating whether to invest in a machinery or in a machine or in an equipment, let me put it that way. Let's say you want to invest in an equipment, okay? And that equipment probably, you know, you are saying this equipment is is going to okay, for instance, let me use this simple example, like you want to invest in a machine that like maybe shawarma. Yeah, let me use shawarma. Let's say you want to invest in a machine that makes you used for making shawarma. So before you invest in that, what you do is you go and undertake just a market survey just to see if you bought a machine, that shawarma making machine. If you bought it and put it at a certain location, you are going to get customers. So what you do is you conduct a market survey. So you spend, of course, okay? You spend, then you gather also even your data there, and you come to evaluate to see whether you can invest in that machine or not. So when you look at the cost of the survey that you did, that is not going to be a relevant cash flow in your evaluation. It won't be a cost that you are going to include that as part of evaluation. Why? Because it's irrelevant. It won't vary with the decision you want to make, because whether you invest in the shawarma making machine or not, that cost won't change. It has already been incurred. It's past. It's a sunk cost. It won't change. Okay, so therefore, you are going to focus more on cash flows that will vary with the decision you want to make. And the cash flows that will vary with the decision you want to make are things like the materials, the chickens you are going to buy for you to make the shawarma. Because if you don't invest in that machine, then you won't incur that cost. But if you buy the machine and you invest in it, then you are going to incur the cost of those materials. That's what it is. Okay. So there are sometimes questions that will tell you about overhead costs, and they will be told that before the project there is this amount. Okay, there is this amount that the project is incurring as overhead. Okay, and when the project comes in, then there will be, apportionment of this particular cost. So when you look at that, you know that whether this project is undertaken or not, that cash flow will still be, that cost will still be incurred. Okay, so therefore it will be irrelevant. But if we say that when this project comes on board, it will result into an increment in the overhead, then it means that the incremental part of the overhead cost there, that becomes relevant, because when we invest, that cost is likely to be incurred, and therefore it's relevant. You see, so you have to know how to identify relevant cash flows, because certain questions come in that manner where you are being tested on your understanding of what to be relevant to include in your evaluation or not. Okay, so that's very important, because once you understand the cash flows that are needed, a typical investment appraisal question, you are going to see that just by using this format, you can answer any question related to NPV. You understanding this format here, you can use it to answer any NPV question. So the thing is, if you are given a question where you're saying, oh, the machine is producing this, and you have sales and what, once you get this template, you will know that, oh, if I have a scenario, I have to find what is the revenue. Okay, is this revenue subjected to inflation? Then if it is, I inflate it. What are the variable costs? What are the fixed costs? Oh, okay, I need to determine the taxable cash flows, then I discount. I tax the cash flows, investment costs. What is the initial outlay or initial investment? Is it in year 1, year 0? Things like that. Working capital, the tax benefits on capital allowances. Just this format will give you understanding it will gives you a heads up. Because with this, all you need is to get now the variables from the question and put them here, plug them there, and you do the calculations until you get the answers. Okay. I think the issue of annuities has been a thorn in the flesh. You find that year in, year out, students are failing to appreciate what annuities are. So please, one thing in the mind of examiners is that areas where you are not doing well will be emphasized, so that you try and understand that for the students. So please, invest time on understanding annuity, because an annuity basically, you are looking at a series of payments or receipts, that you are either making or receiving, where there is an equal distance, and the amount itself is fixed and the period is fixed. Then what you have is an annuity. So if let's say the best example I can give an annuity is rent. Okay, so rent is fixed. Let's say you pay rent monthly. So the amount is fixed. The period on which you are paying is equal distance, it's monthly, for instance, and the amount itself is of course fixed, and the period also is fixed. So let's say you sign the lease for uh, 5 years, and the rent you'll be paying is 4,000 per month. That is an annuity. Okay, so all we need to know is whether this annuity is being received or paid at the beginning of the period or at the end of the period. Otherwise, it's an annuity. So there we will now need to understand, we will know whether it's annuity due or annuity, ordinary annuity, looking at the timing of the cash flows, whether it is being paid at the beginning or received at the beginning, or we are paying at the beginning, or we are doing it at the end. Okay, if it's at the end, like let's say rent is being paid after 1 month, then that means that is ordinary. If it's at the beginning, then we know it's annuity due, and the treatment is of course different. So we need to know what annuity we are dealing with. Okay, so that helps us even save time. So for instance, if it's rent for 50 years, you won't need to go and write 50 times for you to discount. All you do is use annuity factors to discount, and you get your present value of the annuity, and that's it, other than wasting a lot of time. So annuities have been tested over time. I'm sure you can go and check out also maybe the March session. There was an annuity, plus other sessions. I think even what was it, the June also, there was an annuity. So these annuities, the treatment are the same. So mine is to make the awareness so that you find time and go through. Okay. Okay, let's go to the other mistakes that are exhibited. The wrong computation of discount rate, which is the cost of capital, because the cost of capital is what is used for discounting. So you find that coming up with the weighted cost of capital has been thrown in the fresh for most of the students, but it's so surprising because this is one area that is expected in almost every paper, and the way we go about it, it's the same. There's nothing that changes, and there are no surprises when it comes to this area actually. So you see, when you are looking at the weighted or cost of capital itself, you are basically looking at the return that the investors need. That's what they want, the required expected return by the investors. That's the cost of capital. Okay, so investors can invest in a company in two ways, either in debt or equity. So if they have invested in equity, what they expect is a return in form of a dividend or even capital appreciation. So they will expect a dividend, and that's a return to the investors. To the company, it's the cost, and it will be the cost of that capital. Okay, for debt, interest, and that will be the cost of that capital. So now when you get the cost of equity and the cost of debt together, they become, when you weight them together, you mix them, they become what we call weighted average cost of capital, or simply cost of capital. So this weighted average cost of capital is what you'll be required to compute, and that's where most of the students miss it. So sometimes the question will ask you to compute both the cost of equity and the cost of debt, and then you do the weighting. Or sometimes you'll be given the cost of equity and you ask to calculate the cost of debt, and you do the weighting, okay? But if the company is only financed by equity, then the cost of equity is the cost of capital. So now the cost of equity can be computed in two different ways based on your syllabus. You can calculate the cost of equity using the dividend valuation model, okay? Or you can use the capital asset pricing model, these two. So it means you are expected to know how to compute the cost of equity using the dividend valuation model and also the capital asset pricing model. Now, what tells you that you are supposed to use this depends on the data that you have been given in the question. Also, equity, there is the ordinary shares and preference shares. So the first one is dealing with ordinary. That's where we're talking about this capital asset pricing model and the dividend valuation model. But if you have preference shares also, you can calculate also the cost of preference. So now the preference shares depends on the characteristics of the preference shares that you have. Are they irredeemable or they are redeemable? Redeemable means they'll be paid back, this capital will be paid back after a period of time. Then it is redeemable. If it's irredeemable, it means it will never be paid back until the company ceases to exist or is liquidated. So if the cost of preference is irredeemable, then, or the calculation of the cost of preference shares is different. All you do is you get your interest, the dividends over the market value of the shares, the preference shares, times 100, and that will give you the cost of the preference shares. If you have redeemable preference shares, then all you do is determine the internal rate of return, and that will give you the cost of preference shares. The cost of debt also, you have to know what sort of debt you are dealing with. Is it redeemable or irredeemable? So you see the treatment of cost of debt and cost of preference shares are pretty much the same. If they are all redeemable, then you use internal rate of return. If they are irredeemable, you do the same. For debt, you'll be using interest. Instead of dividend, you use interest over the market value of debt. So now, because debt there's tax relief there, that's why you remove the tax. So you just remove the tax on the interest. Then you divide over the market value of debt, and that will give you the cost of debt. Then you weight them together. Now the weighting can be done using market values or book values. So those are the things that you need to be aware of. So in your spare time, please make time and ensure that you are safe in those areas. Otherwise, the question comes, it's the same. I think I've already, talked to this. The other issue is sometimes when the questions, investment appraisal questions are centered on testing on your understanding of risk, in investment appraisal, and there are probabilities being introduced, we see some problems there. So please, you need also to understand that we can introduce probabilities more, especially when we want to take into account the risk, in the investment appraisal. So you'll be expected to calculate some expected values, like NPV, expected NPV, where you factor in probabilities. So even in your syllabus, there is an aspect that or a chapter that addresses risk and uncertainty in investment appraisal. So please, we need to find time and go through this. Okay, these are areas that come, in from time to time. So you need to prepare yourself. That's why I'm saying you have to know the whole syllabus, because sometimes students gamble and they leave out, issues to do with risk. Because when you see that over time, this has not been tested, you think it's not important. Anything is potentially, tested in the exam. As I've shown you earlier, that the papers, they cover the entire syllabus. So probabilities are infused in investment appraisal, and it comes in different forms, where you'll be expected to calculate the expected values and, ensure that you also calculate the expected NPVs, so that you make decisions from there. Okay, so please ensure you are also okay on that. Also, treatment of risks, rentals, and this is related to annuities. So you find that when a paper is being tested on lease, most likely there will be annuities, right? Because these rentals you are paying are basically annuities. So you need to know the timing, the beginning or end of the period, so that you know what type of annuity you are dealing with. Okay? And also you need to know that what you'll be using after tax cost of borrowing, that's what you are using as a discount rate when it comes to discounting this risk payment, or the rentals or receipts. Okay. The other aspect is to do with the failure to compute capital allowances and incremental working capital. Sometimes we see students assuming that every question on capital allowances, it will be based on the reducing balance method. And you wonder where such information is coming from, because in the question it will be explicitly stated that it's straight line. So that just show you that when you're preparing, probably you are just addressing one area, because probably maybe reducing balance method has come over time, so you think it's always the case. No. So when it comes to capital allowances, please establish first what method is being used to calculate the capital allowance. Then you can calculate your tax relief like that. Okay, it's important, so that you don't lose it. When it comes to working capital, also you should know that working capital sometimes can be assumed to increase over time or no increase. If there is increase, then it means what you factor in over the years of the project will be just the incremental part. And normally the assumption at the end of the project is that this working capital will be released or will be realized. Okay? And in such a case, then it means that will be an inflow at the end. Okay, so it's important that you take note that working capital is an investment at the beginning, where it will be an outflow, and at the end it will be an inflow once it is realized. And if there is an increment over time, then what will be factored in is just the incremental part. So if it's increasing by 2 kwacha, then what you'll be factoring is just that 2 kwacha every year, okay? Not the total amount. Then there is also an issue to do with understanding certain certain key concepts. That's why I was indicating earlier that it's important to cover the entire syllabus, so that you are not seen to not understand certain things that come because they are not highly, like regular tested, and that means that they will not be tested. The fact is that they will be tested in one or the other. One such kind of an issue is for instance, in the area to do with the relationships, between certain variables. Like in this case, we're looking at the P ratio and the gearing ratio. One would expect that the student would understand what this relationship can be. Okay, so here, what you will be tested on if you have such a question is basically the ability for you to apply your knowledge. These are typical questions which are just testing your application of your knowledge. Here, you are not going to recall or to start explaining, because the issue is you are being asked to look at this relationship. So we know that the PE ratio, for instance, is trying to measure how much investors are willing to pay for each unit of earnings. And therefore, we know that a high PE ratio means that there is market confidence in that stock, their growth expectation, and lower perceived risk if you have a high PE ratio. Then we also know that the gearing ratio tells you information about the indebtedness of the company. Okay, a high gearing, it means there is the financial risk, there is a high financial risk, and therefore there's a lot of obligations that have to be met before the shareholders can get their dividend. So when you look at this aspect, you can already see that relationship to say if one is increasing, it will affect the other. If the gearing increasing, for instance, it will affect the PE ratio negatively. Okay, so for instance, if we look at the risk aspect, we know as the gearing increases, financial risk increases, and therefore investors won't be happy and they'll lose confidence, because they know that you have too much obligation to meet, and that can affect their investment. So you can see that for you to understand this relationship, you need to apply or understand these concepts and apply them appropriately. So this one is just one example of the way certain questions would be asked or would be posed. Okay. Yeah. So you need to really, really understand your syllabus. Okay. Then the other area is to do with the discussion of non-financial factors impacting investment decisions. So here again, the issue, the mistake you see most of the students is they will try to answer without referring to the scenario, and they'll be giving general answers. Once you do that, you'll be making a very big mistake. What's important, or why a question is being asked in such a case, is for you to apply yourself in the scenario. So if a question is asking on this and you start just remembering general non-financial factors, you won't get the full credit you deserve. So ensure whatever you are answering is in relation to the scenario provided. Okay. I think this is also still explaining the same point from the previous one, where you are failing to link your explanation to the provided scenario. Sometimes you have the theory about a certain component, but instead of apply, because this is application level, we want to see your application of your concepts in certain areas. So if you are asked a question and there's a scenario and you can't apply your theory to the scenario, then it means you are lacking. Okay? So you need to relate to the scenario provided. That's very important. And the other last issue on the common mistake is failure to do the simple things. I always emphasize on this. Please, please, please. There are certain straightforward things that you need to do that will give you easy marks. Just one example that I was giving about NPV. You have somebody calculates and they get the NPV, then they fail to conclude. Those are easy marks because even when the NPV is wrong, but if your decision is correct, you get credit for that. If let's say the NPV is positive, then you calculate NPV which is negative, and you conclude that it can't be, we can't invest because it's negative, it will reduce the shareholders' wealth. You get a credit for that. Those are easy marks. Rather than for you calculate, then you leave it at that and you proceed. You have lost marks like that. So please get simple marks like that. Okay? Manage your time. Time management is very important. Earlier on, when we started this presentation, I did allude to the fact that sometimes we see, students answering less than the required number of questions. One of the assumptions we take is that they didn't understand the syllabus. Therefore, they didn't understand certain other questions. That is just one assumption. The other is that you could probably understand the syllabus, but you failed to manage your time. And time is part of the exam. So if you fail to manage your time, definitely you will fail. So please manage your time. If you have allocated, just argument's sake, 40 minutes to section A, when 40 minutes elapses, don't continue. Go to the other part of the questions. Question 2 or question 3 that you have chosen, go to there and answer. Because if you continue, the chances are that you are continuing to answer probably on the 10 marks or 5 marks that are remaining for you to complete, and yet you could be somewhere else answering a 20 mark question instead of 5. Now, the more you spend time on the 5 mark question that is remaining in section A, the more you incur the opportunity cost because you are losing out. What are the chances that you are going to get 5 marks out of 5? Or what are the chances that you're going to get 5 marks from a 5-mark question, also compared to the chances of getting 5 marks from a 20-mark question? Where do you stand more or a better chance? You find that you stand a better chance to get 5 marks from the 20-mark question than from a 5-mark question. The 5-mark question, maybe you get 2 or 3 when you can get 5 from the 20-mark question. So move on. That's what we mean, that manage your time. Okay. Allow me with that to quickly run through the examination answering techniques. Just adding on to what I'm from saying. So when it comes to examination answering techniques, I know you must have read this over and over, but I have to emphasize adequate preparation. Understand all syllabus, and this is the first thing that I shared with you as one of the mistakes that students make. Please avoid it by preparing adequately. Secondly, time management, which I'm just from talking about. Please manage your time. The best is use 1.8 rule. Each mark is worth 1.8 minutes. So if you have a 40-mark question, multiply it by 1.8, and that's the total number of minutes you should spend there, not more than. Okay? Then presentation of work, plan answers, especially the discursive questions. Please, you can use headings or paragraphs. Separate points. Now, I don't know why students want to write mixed points and there's no paragraph. You write pages and pages where there's no paragraph, no heading. You are just writing and you expect that the marker has to start reading such, and probably even your handwriting is not, you are not gifted. So don't make it difficult for the marker to pick the marks. Separate points, separate them. Please, please, please. Discursive questions, separate points. Use paragraphs or use sentence headings, like if you are looking at the disadvantages of NPV, if you are looking at its complexity, you put it, it's complex, then you explain it. And that is that's a point. When you come to another point, separate, you can even separate by one line. Okay? When your answer booklet is done, I can tell you that Zik has a spare booklet to give you. If you want, you can use 5 booklets. You are just writing. There's no problem. So there is no one you are leaving that space for in that answer booklet. So use it. Use it to separate points. If you have one point you have driven, go to the other points, go to the next line, just like that. Understanding the key verbs is very important because that will make you answer the question as it was asked. Okay? Then pick the easy questions first. That allows you to settle. So if you have a paper, it doesn't mean that question 1 should be the first one to be answered. No. You can even start with the question 2. You can start with question 3. You can start with question 4 or 5. It doesn't matter. What is important is every question should be started on a separate page, on a new page, and properly marked as question 1. If it's question 2 you have started with on the first page, right? Question 2, that's what you have started with. And when question 2 is done, you want to start question 1, go on a separate new page. That's where you start question 1. Just like that. If you want, you can go to 3, or you can go to 5. That's when you go to 3. It doesn't matter. So if you feel question 2 is the question that is easy for you to answer, start with it so that you settle down. And even in any case, sometimes when you know it, you can even manage your time, and you probably sometimes even save time for other difficult questions. Okay, I think I've talked about planning using the 1.8. This is how probably this particular question where you have 12, 14, 7, 7, it was an exam in 2021, you can allocate your time like that. You know, you have probably reading the scenario, you can allocate 0.3 for reading the scenario. So like section A, reading the scenario would require 12 minutes, you are done. Then 21 minutes, the 1.5 times 40 should be uh, for what's this? Like in this case, uh, that's about 60 minutes should be about answering the question, the 40-mark question. Okay. So what am I saying in my conclusion? We're saying that it's important that you understand the whole syllabus. I think this has come out over my presentation. Okay, you understand the syllabus. Don't specialize in a few topics because the exam paper covers the entire syllabus. Be aware of the weights attached to various competences. It's important. It's part of understanding your syllabus. Okay. The objective of the examiner is to include questions relating to investment appraisal, dividend decisions, valuations, financing in line with the syllabus weights. Every exam session, that's what you see. So you can't afford by just specializing because that is a very big risk. Okay? So you should also take note of the syllabus areas that are highly tested: NPV, cost of capital, valuations, ensure that you understand those. But not to mean that specialize, no, because that would be a big mistake. Present your work properly and manage your time. And please understand the verbs and answer the question that was asked, not what you wanted to be asked. I thank you. I will I'll end here unless there are questions. Mr. Benaya, I'll be open to questions and clarifications. Okay.
Hello. Good.
Hello. I'm not sure. I'm getting you, Mr. Mutimba.
Thank you so much for highlighting these techniques. From what I've noticed, they are very, 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 very important and key to passing an exam. Mine is not really a question; it's just maybe an appeal to say, is it possible that these techniques can be shared maybe 2 months or a month before the final exam? I think it will open up most of us and be able to prepare our minds in line with the exams. I think it will be more helpful if we are doing this maybe a month before the exam and towards the end of the exam, like we've done now. It's just an appeal if it is possible, if that can be done. I think it will help, so that if we have enough time at least during that period, we can even start practicing and thinking in line with what we've been guided. Yeah, so I was just appealing if that is possible. Then it will help and save the purpose even more. Thank you.
Thank you for that question. I'm sure Mr. Benaya maybe can comment on that. Mr. Mlima? Okay, but that is taken. We definitely pass it on. Mr. Chileshe?
Good evening, sir.
Good evening.
Doku,
Oh, sorry. Oh,
Dr. Kagwe, sorry to interrupt.
okay. Thank you
Yes,
very
Mr.
much.
Amin.
Hello.
Okay, you may go ahead.
Hello.
I'll ask later. You may go ahead.
Okay. Thank you very much for the presentation. And I wanted to first let me answer my colleague regarding the exam technique. Zika, they have the YouTube channel where we can find the exam techniques. So I think that can help. And my question to you is on the P ratio. If you want to use the P ratio, let's say we want to value a certain company and it's not listed, then want to use the P ratio for a listed company. Let's say for let's say my company is dealing in manufacturing of cement. Then I want to use the P ratio, let's say for Chiranga, and my company is not registered. Is there anything like, because I saw the question how it was solved. They multiplied it with 2/3. Now I wanted to find out exact if it is the way to go about or what. And my other question is also on how to find the market values for if you want to calculate the work. That's where I'm having a challenge. Thank you.
Okay, I think I got the first part of the question, but the last one you are saying you want to value the company, uh, using what or something? What was the question?
Using the price earnings ratio.
Yes, that's the first aspect. I think you are talking about using the two-third for the unquoted company, those which are not listed. So you use two-third of uh, the available, data on the market for those which are listed. You use the two-third of that to try and get your valuation. Because normally when you are doing these valuations, they are estimates. We want to estimate like what value can we attach to this company. So you see those which are listed, they are more marketable, and we know what the advantages that goes with the listed. So normally the assumption that is made for the unquoted is that you can use a range of the two-thirds of that PE ratio to try and estimate the value of the unquoted company. I think that's what you are speaking to, and the common thing that you see from the prior papers. Yes, you can use the two-thirds. But the second part of the question, where you are talking about the costs of capital, I didn't get that.
Yes, the cost of the average, the weighted average cost of capital. Like when you found your cost of debt and the cost of equity, then now how to find the market values of those shares?
Oh, okay. Okay. So the question is, when you are trying to use the market values as the weights instead of the book values.
Yes.
So yes, so the information will be given in the question. So for like equity, you'll be told the market value per share is so much, and they'll give you the number of shares. Maybe they have not given you the number of shares. They expect you to calculate the number of shares, or excuse me. Basically, you'll be given the data. So for equity, you'll be multiplying the number of shares times the market value. Then for debt also, you will be given the market value per unit of the debt instrument that has been given, whether it's a bond or what. So they will tell you maybe this is the maybe 1,100. If you are given like that, you use that, because what is important to know is that the information is given in the scenario. That's how I can answer that generally, with not having the specifics of the questions, because questions, of course, they vary. But the mistake you would make is to use the book value when you have been told to use the market values. Those values can be determined based on the data that you have been given in the question. It will always be there. I think that would be my comment on that.
Thank you.
Yes, Mr. Mapalo.
Good afternoon. Can you get me?
Oh, yes, Miti.
Yes. Regarding the question that Mr. Chileshe asked, what if you are given, let's say the company has a loan, has taken bonds and other long-term liabilities, how then do you go about finding the weight and also the equity, because you have different equities for those three?
Yeah, come again. You have been given what?
You have been given, let's say the company has two long-term liabilities. It has bonds, it has issued bonds. It also has, let's say, a long-term loan. So how do you go about finding the weights?
The long-term loan, you're saying the long-term loan, is it a loan note or it's just a bank loan?
Yeah, it's a loan note, because bank loans are quite straight. You just take the interest. Now the loan notes.
Yeah, that's the one I'm saying. You will be given the market value per unit of the bond. You'll be given that information. Even the loan notes, that will be given in the question. So it means these, like the bond, it will have a value, and these loan notes, they also have a value. Okay, then you have also equity. You are going to have also a value for that. So in terms of the weighting, you will now come and weight based on the for the value of each in relation to the total value of the overall, the total value that you calculate. So you can do the weighting for every single capital provided in the capital structure. We can find that. So lack of the details actually to the specific question, but I think I can answer in general terms like that. So you can determine the market values. The information will be there in the scenario to determine this.
Okay, so if you're given two debts, you're trying to find one cost of debt. How do you go about?
Each one will have a cost, because they will have their own characteristics different from the other. So if you have the loan notes, they will be separate from the bonds. So you have to calculate the cost of these the bonds, the loan notes. You can calculate that because they're not the same. You can have bonds issued at 12 12%, for instance, and another one is at 20%, they are different.
So in such a case, you have to calculate them separately.
Yes, separately.
Okay, thank you.
It's like you have cost of preference. You have preference shares and ordinary shares. You calculate preference shares. You also calculate for ordinary shares. Okay. So those asking for the recording, yes, Zika will share the recording for you to go through in your own spare time. Okay, I guess Mr. Mulima, you can take it up.
Doc, I just want clarity. At the time I wanted to come in, I think I'd find that you have already raised the point that you wanted to share with me.
Oh, okay, it was I think that was answered about the timing of these examination answering techniques. I think he was trying to suggest that we can do it maybe a month before, or maybe do 2 times. I think that's a comment that that came through. So I wanted you to give a comment on that.
Oh, okay. Thank you, Doc. And then if are there any other questions? It seems like there are no other questions. And then I've seen in the comments there are the questions about the examination techniques recordings. The recordings will be shared to you. The recordings will be shared to you. And we just need to consider what the expert has told us, Dr. Kabwe, on those examination techniques, the common mistakes, for us to excel in this 2.5 financial management. Having said that, if there are no other questions or rather comments, I don't know, Doctor, if you have any other comments or other clarity that you need to share with our students.
I think for mine is just to thank you everyone who has taken time to attend and also to interact. Otherwise, I would encourage them to take time to listen to this recording and just try and follow through what I was trying to communicate in relation to these, answering techniques, and also the important areas that I've tried to highlight, and also to avoid the common mistakes that I've highlighted in this presentation, because these are the things that we see over time. Thank you.
Thank you, Doc, for those words, and I would like to thank you all the participants who have managed to spare their time to log in. For
Sir,
students, it's your benefit. It's
hello.
really, yes, Moses Chileshe.
Yes, I have another question, sir, regarding on the cost of debt. Let's say it's a bond, then the coupon is paid per quarter or semi annually. How do we find the cost of that debt? Because I've seen the formula is quite different to the one that we normally use.
In the interest of time, I think I'll allow only this question if our doc is able to answer it, and then we'll end our discussion. Doc, are you able to pick that?
Okay, I see like the question is in relation to the number of compound, you know, that you are talking about quarterly, so it's like 4. And yes, that can be determined. The formula that you are given, of course, when we are discounting, when we are doing what, we are given we assume that it runs. I believe the question was on the discounting. I got you are saying you are given a bond where you are paying the coupon for quarterly. Is that the question, Mr. Chileshe?
Yes, yes. The coupon is, let's say, maybe per quarter. Then how do we find the cost of debt in that regard? Because normally that formula, I've seen that it's working well when we are finding the year.
Yes, yeah,
We are
yes, we make adjustment to the, instead of assuming compounding once, it will be compounded twice. So even when we're finding the present value, we make that adjustment. I know it's something probably I can't have time to demonstrate here, but my answer is that yes, we make adjustment to that formula that we have, which assumes that you are paying, or the bond is being paid once per year. So normally what you are, what you see over time normally is where it's been paid once. But that formula that you are using can also be, we can adjust it to show that this coupon is being paid 4 times. When you say quarterly, it's 4 times. And when you say monthly, it's 12 times. So yes, we can do adjustment. You have to adjust so that you align to the number of times that the payment is being made. So even when you try to discount, when you want to determine your internal rate of return, which will be your cost of debt, definitely you have to make that adjustment.
Thank you, Doc. I hope the Mr. Chileshe, the one who had asked the question, has heard that, but I've seen that I think he has logged out. Having said that, I would like to thank you all.
I'm still available. I wanted to find out from him if maybe he can share maybe a formula, because normally it's quite difficult to find that one. Maybe if you can share a formula as an example. Let's say we just use a quote as an example.
Mr. Chileshe, are you there?
Yes, sir. Yes.
Okay. However, these were just the common mistakes that were there. Is not here to lecture or whatsoever, but to give some common mistakes that are there that you students usually make. However, we would like to thank everyone who has joined, and appreciate that you put more efforts in these listening to these recordings, and adhere to all the common mistakes that Doctor has highlighted from his expert point of view, and also encourage your fellow colleagues to be joining this, because it's from these common mistakes that we make the things that will help us to excel in our exam next. As we are preparing for the December examination, which is coming, we should also note all these points where the doctor has explained, and also maybe listen to the recording which will be shared to you and all this which have been said. Having said that, I would like to thank you all who have joined and wish you all the best in the exams. As I alluded earlier, the recording will be shared. Thank you.